Good evening. This is the Eye of the Storm podcast for the S&P 500 and the NASDAQ 100 for Sunday, August 28th, 2022. Friday's reaction on to the Jackson Hole speech by Fed Chair Powell got a much larger reaction than I think people were really looking for. It wasn't first up on my list. It fit in all the presentations that I've made, all of the counts that I've labeled. It has fit very cleanly. But it nonetheless, it did come in a little bit stronger, which brings about another scenario that I would like to present. I'm going to do it here in the podcast, which is a little bit longer, a little bit more detailed. And it's also a discussion on Elliott. So this is all about Elliott labeling. So here we go. Here on the S&P on Friday, it dropped very precipitously, very consistently. There was no argument about, in other words, even between buyers and sellers, we're all going to step in here and we're just going to push it back up. That did not occur, even with it being expiration. Now, expiration Friday may have had a bit to say about that, because primarily we saw Apple turn and just cut everybody up from the 172.5, 175, 172.5, 170, 167.5, 165, 162, just tore them up all the way down. That type of adjusting, not only just in Apple, but also in Amazon and in Google and in Microsoft and in Facebook and Netflix and NVIDIA, et cetera, all of those stocks just sliding through strike prices brings about a lot of adjusting. And it's a gamma squeeze, and you can go look that up and it'll tell you all about what that does and how it affects a market. Now, having said that, that could have aggravated and pushed even further the sellers coming in to make these adjustments. Nonetheless, the market did that and now has gapped lower to start the Globex session here on Sunday evening. So what can this be telling us? Well, obviously, I'm showing a different account right now. And first of all, I need to give a shout out to Shah J, and he is a subscriber on YouTube. And so I actually had asked him what his count was. We've been in the conversation. He gave it to me. I went in today and I thought, it actually can be. Now, I want to just go over it and then show you why it could be. Previously, I had carried as an alternate and in tandem with my other count, which was showing that this is intermediate wave A. We're in an intermediate B wave still, coming off. That's still a valid count, but I want to present this because of the intensity that this thing kicked off on Friday. If we get another day or two of that strengthening of an intensity, it's going to bring us down pretty far. And it's going to throw a lot of things into disarray, so to speak, in terms of what do we do next? Now, so I'm going to present this count and then we'll go over both. So this particular count suggests that the ABC that we did going up was actually on an intermediate degree and it completed the primary B wave. So instead of being that we were counting this ABC up as intermediate wave A, that we would be in an intermediate B wave, of which this was A and B, and now we're in that C wave down. That still is in position. What comes next? In other words, how the market wants to react to how it's trading right now, in terms of, is it going to fall apart? Is the S&P going to break below this 50-period SMA on the daily, et cetera? Those are going to add some additional. Don't forget that we do have support, but if this is indeed what is in force, then we are dropping into a minor third coming off. And I had struggled with how I would turn this, if I was still going to label it as a minor two, how I then fit that into coming off in a minor third wave, with the intensity of Friday. So I'd had to go back and rethink about what could drive the market lower. It could be happening, and how would that fit under an Elliott view? So again, the same deal. We've always been looking for this primary C wave down, but I was not looking for it just yet. And that still may be the case. We've seen these markets get schizophrenic, get extremely negative, and then flip on a dime and get positive about something else, and then just turn it and take a run. So those things still exist. Now, what this count again suggests is that the primary A wave, done deal. Primary B would be complete at last week's, actually that would have been on the 16th of August, 4327.50 high. And at that high, primary wave B ends, primary wave C begins. What is inside of primary wave C? 5 waves of intermediate degree down. So we're already looking for a fairly strong C wave down. And since it's going to be on a primary degree level, it's going to be very strong because it's this 1 degree higher. So each time we move up a degree, these C waves are going to be more destructive until eventually we get to that cycle wave C down, and that will accumulate and put it all together and finish, I believe, a lot of the correction. And it'll come from a level that will be maybe, I will see, because I have no idea where, if this is primary wave C, where it's going to end up. But they will all be, now that we're moving up, they'll all be very devastating. And it certainly is kicking off very quickly in that manner within the third wave, which is where we would expect a lot of this stronger move. So no matter what, if this is a C wave, but on a smaller level, like it's a minor C wave down, to put in an intermediate B wave, well, that's going to be telling us something different, because then we're going to be looking for those supports to hold. And again, that's why I'm presenting both counts right now, because support at 39 down, 4,000 down to 3,900 would truly come into question if we have another strong slide like we did on Friday. We cannot rule that out, even with them stepping back in and buying it back up a little bit now. Again, this is just trading at the moment. Nothing, I think, is getting positioned. It's just people coming in and making adjustments coming out of expiration, getting that done early, or just folks that want to trade. Now, if it is a primary C wave down, what we need to do is put down some parameters. And those parameters are going to come, right? For putting in, we've got to take in primary wave A to the top of primary wave B. And then I'm going to fix all of these entry levels. So the beginning point is 4808, actually. So I remember that high. And then the end point is 27.50. And the middle point is 36.39. So I'll actually just round this up to 28. So no fractions. Okay, so that makes a slight adjustment. So primary C wave. What are the expectations? Primary A, it would be equal to primary A at 31.59. That's where it would be equal. 618 would come in at 24.36. So if this is that big bombshell decline that others have been talking about, and I also have been talking about, but I thought it would start from a higher level. I thought we still had a little bit more of the primary B to do. If that is not the case, how we're going to get the confirmation is, unfortunately, firm confirmation doesn't come in until it breaks below 36.39. Then it's like, that's it. It is a primary C wave down. But we're going to have to trade it in between as if it is coming off in a smaller C wave, which would take us down into those support zones. And those support zones are really right here, 39.90, so 4,000 to 39.90, and then down to 3,900 when we put Fibonacci retracements from that low, 36.39 to the high. That gives us where this could come in, and then I could throw some additional fibs in down here to actually put to see what overlaps come in. Now, but first, I'm going to see how this all pans out into our opening. So getting back to the change, it does produce that bigger move now versus the market finishing this ABC and putting in an intermediate B wave and then an intermediate C wave to finish this primary B wave. That would continue to suggest that we're going to go back up above 43.28 to finish. If this is not the case, right? So I'm going back to the other count, and I'd have to switch too much, but just bear with me. The alternate or the other view suggests that this is a minor B. These are all minutes, and that this is a minor C, and then it's an intermediate degree A. And that we've come off in a minor A, minor B, and now we're dropping in a minor C for intermediate wave B. So let me take this off. Let me put some different ones on that would suggest, we got that one. So we're going to do this down to here, up to there. And then I'm going to quickly go over and put on the other set of fibs, which is going to show us just the retracements for. So let me go over here, that top 44.28, and that bottom is 36.39. So let's say okay to that. I know this takes me a little while, guys, sorry. And now we're going to edit these properties. And again, we're talking about that 43.28, and the endpoint is Friday's silly high, but it was the high and then it died. 42.17, 42.18, I'll call it. And our middle point is, there's that one right there. Whoa, it's really tough sometimes to see my own lines. 41.10, 41.11 actually. I'm going to call it 41.11. All right, so now we've got these fibs. If indeed we're going to get stopped here. So in other words, we got support at 4,001. We got support at 33,983. Then the B wave has support right there at 39.83. That's 50% retracement. So, and that's in kind of backwards. So that needs to be in reverse because it's 618 coming down, not 618 going up. So let me redo that one. But there's going to be difference. This is going to be 618. This is going to be 50. Something in that lineup. But anyway, we have those same things. We have 4,000, which is exactly still remains the same. And that is all a possibility. Now, if it breaks, and then we still can let it go down to 39.83, and it still could be the other, stop on a dime and go. But again, if we're going to have that intensity in the selling again, then it is more than likely. That's why I'm presenting both. Unfortunately, we can make our adjustments and trade it. If it's going to get intenser in the day, well, by all means, I'm not saying it's like We got to wait for certain levels to be hit. You trade what's in front of you and you trade accordingly to what the price action is telling you to do. But if you're needing to switch out positions or things of that nature, then you're in a much different position than if you're just jumping into trade. You've got to make decisions. And that, unfortunately, is going to be really now up to your own risk profile and what you're willing to take, and where you're at. Where that level, you'd have to have a stop. If you're long, you've got to stop. And a lot of that's going to come from the individual stocks themselves. So in any case, we have overlap between the two, right at 4,000 down to 39.83, and then 3,920-ish, which is where it was before, pretty much down to 3,900, and that was the 618. So the 50 level is 39.83. That remains the same. And then the first one we had was 4,000. So 4,000 under 39.83, it's a zone. And we'd look for that to find the support and to complete it if that's going to be what is actually happening. Our next level of support is 39.20 down to 3,900. Those still keep alive that we could rally, break back above 42.38, then start the B wave. I'm just tossing these out. Neither one is making themselves clear. I've got to wait for these breakpoints and these other things to come in that you can shift over. If that is the part where people think it's wishy-washy, and it's not. But in terms of how do you want to trade it, that has to be left up to as individuals. So I'm making the point is like, if this turns and stops and goes, I'm in a position where I will be able to trade it. I don't have to worry about how far it needs to go. If it's going to go, I'm a day trader. I can trade what's in front of me much easier than if you're a position trader, even if you're swing trading. And you've got to make a decision about what you're going to do. And that point on Friday gave you that pause to look at what things were. All right. Now, I am going to leave that alone and go over to the NASDAQ, which actually carries the same picture. So again, I changed it over here as well. Now we gapped a little bit more, but we did gap here in the NASDAQ. And they're now just playing around between the range that was already been set on the opening. And so we'll see how the Asian markets want to open. They've not had a chance to really respond to Friday. So they're up next, and then we get Europe to respond to Friday, plus all the other developments, plus. So we got a lot of things kind of coming out. There's now going to be more discussion, just in terms of fundamental things, a lot more discussion on this infrastructure package, which is the inflation battle package, whatever they're calling it, starts to come into law. They start to appropriate the monies. They start to get the whole programs going. It's going to take a little bit, but again, now we're getting more analysis from people as to how that will affect inflation, how it will affect the other things. As I've stated before, folks, it is an inflationary package, but it is going to put a lot of people to work. It is going to increase the tax base. So as far as our government and operations, it's like, yeah, as long as they have the money to operate, then it's a good package, isn't it? So it increases a lot of things, but it is inflationary to the overall economy. It will start to disrupt earnings, as I have discussed. We don't need to deal with that today, but it's in there, and inflation is real. And hearing this talk from Powell on Friday really gives a confirmation. Again, they're not kidding around, or at least he's telling us he's not kidding around, and that this is what needs to happen. And it could be painful, quote unquote. So with all of that in mind, I am now looking at, and again, shout out to Shaw J, a subscriber to YouTube. And for bringing this, we have been in a conversation, and I asked what his count was. And actually, I shouldn't say he. I'm not sure what Jay is. In any case, I will leave it as this has been presented, that at the high, what I was labeling as intermediate wave A here was all of primary wave B. And it actually fits. I can run some straight fibs from that high down to this low, and I'll just do it quick so we can see. Let's see. There you go. I'll go with that. It's going to be a little bit higher. But we had gotten up to, and actually this would come up, and which would bring this up very close to the 50% line for the whole B wave, right? This is the A, and then we knew we could have gotten, this was A, that the B was going to come up to here, up into there. So I had left open, if this was intermediate wave A, that intermediate B would come down to here, and then we would turn and once again go above that high, which is 13,741, and then up to probably 14,000 and up in here. Now, this also works because it's suggesting that the entire ABC, which is an intermediate degree, completed primary B. I tend not to do that as much anymore because my feeling has always been that as an Elliott wave analyst, there are times when we just tend to count too quickly and in degrees. But as we continue to unfold on this, I am more willing to kind of accept the degrees because of my alternate suggested that this was -1, this is -2, and we are still within that C wave. This clears that up by taking it up a degree, clears that up as to how hard this was going to have to come down and in what degree it was going to do it. So if this was a -2, then it would be coming off in minute waves, and the move that we got on Friday just smashes that theory because minute waves would not be that big. I mean, they can be, but it would be the start of minute wave 3. So sub-minute wave 1 would be 500 plus points. Actually, yeah, 500 plus points in the NASDAQ. And it just didn't work anymore. So that's why I'm now looking at this one. Yeah, it stands a little bit higher probability of now being in force against the other, which again says that this is intermediate wave A of primary wave B. We're still within the intermediate wave B. We still have a C wave rally and then that larger decline. Now, I am going to leave that together because thus far it has held the parameters that would supply and keep that in progress. Again, this wave is going to tell us a lot. If it comes down in a -3 now, because that's really the position it's in, as a part of this, then we're looking for 5 waves down of intermediate degree. Do I believe that that's somewhere within that realm? It's going to break 11,068? Yes, absolutely. Absolutely, I think it'll break it. And it will have to break it. And this spill on Monday puts it a little bit nearer in terms of when it can take place. If they're making a big switch to get out of this market now, and this gap is not going to just be whipped around and they're going to walk up and fill that gap, yeah, gap, schmap, and we're just going higher. Because now there's a little bit going against that. So, and I will say that on Friday, that last hour that the exchanges give for the funds and everybody else to come in and do whatever they need to do to finish their day, to finish whatever their business. They give them an extra hour. Instead of it used to be 30 minutes, now they give them the whole hour. In any case, that ended on the lows. So the extra hour, they just sold it and it ended on the lows. So we're just pushing even further right now. So what does that tell us here? Well, this is not the one I need. So I'm going to take that one off. And I am going to go and put on, if indeed this is primary wave B, and we're coming off in the start of primary wave C decline, which will consist of 5 waves labeled 1, 2, 3, 4, 5 of intermediate degree. We're in that first drop of intermediate degree, which will consist of 5 waves of minor degree. There's -1, minor wave 2. We're in minor wave 3 of intermediate wave 1. there is a lot more to go in this drop. What can it look like? Let's put that up there. So I go to that high, down to that low, up to this high. 40, 41, come on. I'll take 45 and go and correct it real quick. And then go in and just correct it real quick. The beginning point is 768. Boy, that was pretty close. The end point is 741. And that midpoint is 1068. Didn't do too bad. All right, so quickly. Primary wave B would be equal to primary wave A at 8,041. Now, most of the time, a C wave in comparison to the A wave is going to come in down in here. 4518. So again, I'm looking for the primary degree to finish the first, cycle wave A. I'm looking for that to come down to here. So we're looking at 6,600. We're looking at 6,695. Bingo. And that would be, end of September or into October. But it's going to take several months to get us down there. And if that, I was expecting that kind of a drop in the primary C wave, whether it was going to begin here, whether it's going to begin here, I would be still looking for it. And I've often felt that that's where the primary degree part of this ABC collective decline to form cycle wave A. Then we get yet again another tremendous rally. Going to look like that, I imagine. It's not going to be 5 waves though. It's going to be 3 to form a cycle B wave, and then yet another cycle C wave. So this C wave, right here we have, this is C. Now we're getting it up a degree. It will be, say, 5 to 10 times this in terms of depth, in terms of power, in terms of just going from where it is down to where it can go. So minimum, I'm looking for 8,041. That's the 100%. We'll refine those numbers on the way. That's if this is indeed a primary C wave. Otherwise, it's just early with that. And basically what we're saying is that, well, this could still, let's take that away. And this is still an A wave. And this we do as a intermediate B wave. And then we get a rally that brings us back up to 14,000, 14,250 as an intermediate C wave. And then that then completes the whole picture. But then it's going to say, what between when this thing can bottom down here and we get that big giant up in the next week or so, what's going to be able to do that? I don't know. But then again, I'm not going to discount it. We've seen this market turn on a nonsense and just start to plow higher. But now we've got additional evidence about inflation. We've got additional evidence about interest rates are going to continue to go high. We got different things that are going to push, people are going to accept and start adjusting. So either way, now I'm going to bring this down to the 4 hour. And again, on the 4 hour, we can see the strength. This is how it's gone through. So we're already through. The last holdout was on the daily chart was the 50 SMA, and that's sitting down here. So I believe that was right, or was that just on the S&P only? No, it's here as well. So the 50 SMA is sitting at 12,512. A break below that, I think, sends us right through that. Also, that support, fib support at 12,479, and we just start heading down, and we just start going and going and going, and then we'll be breaking 11,563, and beyond that, there's your ticket. 11,068, the previous low, and then it really won't. It'll probably break that pretty cleanly, and it doesn't stop until we're like below 10,000. That's 11,000. It's like it'll probably go 11,068, and then it would slip down to 10,891. Might find some support there, I would imagine, but then this is where it's going to be. And we're heading towards ultimately the minimum of that. And we do have those fibs that'll take us down to that previous low of 2020, March 2020. So that's all lining up. And right now on our daily chart, folks, we're getting them. We're now looking, this is the daily chart. We're looking for the 4, the 8, the 20, to slide below the 50. And then it will be, the daily will be back in alignment to go down. The 200s held, that kept that longer term downtrend intact. It really did. I believe it's going to be broken within the cycle level, but then it's going to depend how low it dips. So a lot going on tomorrow and Tuesday. I'm going to even we'll give it the rest of the week. We need to see these other breakpoints be taken out and not looking back. Pretty much this is what we saw on Friday. Bing, 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 bing. Look, there are no green bars. None. And we're not starting with a green bar. Now, this may end up an island, and then we just turn and we come up. So keep an eye on stuff, folks. This could be, we've seen this before. You know, the Southern Death Cross, whatever you want to call it, I'm not sure. But that all by itself, if we walk in tomorrow and it's just like, me, I'm going to leave that just like that. All right. So I am going to complete it there. Tomorrow's a big day. Continue to trade using your moving averages, using, if you use the volume profile, the order volume profile, then you're going to be paying attention to points of control, value area high, value area low, naked points on both sides. So rallies will be, you know, if we get an extended value area high or an extended point of control, a naked point of control, those do come into play at some point. It may be on a retracement. Me personally, I will be using more cleanly, I think, the swing arm, which I have here on Thinkorswim, and also over, actually, I don't have it on Thinkorswim, but I have it on Ninja Trader, which I couldn't open today, by the way. Ninja wasn't going to connect for me. So I've got to see what that's going on. So in any case, right now it's looking like we should continue to go lower. Now, everything is telling us that it's pretty oversold. Look at this. Now, the daily can stay down there. The daily can just kind of flatten and just go like this for a while until it's cleaner and ready to go up. Let's see what the weekly, let's see, weekly's pointing very hard down. So again, on the weekly, we are below the 50s and we're heading for the 200, which is at 11,859. Again, that was a big number for us before. It's right in here. So between, and then we got the SMA at 11,073. So the SMA takes us right down to 11,068. It's sitting right there. That would be the final break. So that's a good place to be. That's the weekly 200 SMA. All right, I'm going to leave it right there, folks. I'm going to call it an evening, and the next update will be on Monday, the 29th.